the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, and here they'll take us beyond the bell. It's a global simulcast with Madison Mills and Jess Menton. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership for those folks streaming on YouTube. Madison, markets right now pretty much where we left them, I think, the last time we spoke to you and Jess, which is down across the board.
Yeah, and it's really interesting to think about whether we are seeing some profit taking today, which I was able to read about from my incredible colleague Jess Menton's reporting earlier today. But one of the questions I have is how much of a rotation into that thinking are we going to see, and when is it going to stop? When is the buck going to stop when it comes to some traders taking some profits here, Jess?
Right, and a lot of my sources talking about some of the seasonality factors as well as positioning coming into August and maybe having an excuse to sell. But nonetheless, when you're looking at a lot of these big tech and growth names at the top of the S&P 500 and NASDAQ 100, which are obviously more heavily weighing on the stock. But I just want to say, I mean, Apple's only down around 1.5%. I mean, still more than 1%. But when you think about some of these other big names, it's still not quite as violent of a sell-off that you would think it would be.
And, well, you do the benchmark math, and you think about how much that 1% loss on Apple means for the overall index,
right,
and you end up with a day like today.
Yeah, I mean, in fact, it's not even just Apple. It's that whole Magnificent Seven, if you remember, that we always talk about.
Who named
Apple.
NVIDIA?
I don't know. Now, someone who apparently doesn't have that much creativity. But yeah, NVIDIA's down 5%. Amazon, Meta, Microsoft, Tesla, and Alphabet each down about 2% or so here. You put that all together, and, well, you get a down day. You get a 2% down day for the NASDAQ composite. More than 300-point decline here as we get the closing bells in New York. The S&P 500, where that Magnificent Seven also has an outsized influence, down 63 points, or about 1.4%. The Dow Jones Industrial Average finishing the day down by 1, and the Russell 2000 lower on the day by about 1.4%. A lot of earnings to cover here after the closing bells, and we start with that right now. Qualcomm crossing the wire here. Their fiscal 3Q numbers coming in. Adjusted EPS a beat, $1.87 versus street estimates of $1.81. Their revenue for the quarter also a slight beat as well, 8.44. Excuse me. Their revenue for the quarter looks like a miss, 8.44 billion. The street was on average looking for 8.5. This is for the fiscal third quarter. Let's get you the guidance going forward for the fiscal fourth quarter. They're looking at revenue in a range of 8.1 to 8.9 billion. The street on average was looking for 8.8 billion. As for adjusted EPS for the fiscal fourth quarter, they're looking at a range of $1.80 to $2 a share. The street guys was looking for $1.94 on average.
Yeah, the CEO saying that as AI use cases proliferate to the edge, on-device AI has the potential to drive an inflection point across all of their products. Also saying they plan to proactively implement additional cost actions and still seeing calendar 2023 handset units down as well, Katie.
And it's interesting. This is one of those chip makers that hasn't really joined in with the euphoria that we've seen in some of the other names. Qualcomm only up about 17.6% for the year through today's close. It looks like after hours not really getting much of a lift after these numbers.
Definitely, and especially when you're thinking about the chip space and the Philadelphia Semiconductor Index this year rebounding close to around 40% after losing more than a third of its value last year, and seeing maybe the brunt of the pain that a lot of these chip makers had to go through over the past year might be past, which is something that Barclays had called earlier this year. But still, nonetheless, it's very tied to the trajectory of the economy.
It'll be interesting, too. We're going to get a nice cross read on the economy today with a lot of earnings after the bell, including Clorox, MGM, Occidental Petroleum, DoorDash, PayPal, Zillow, TripAdvisor, and as well as Etsy as well. And so you put that all together based on what we've seen so far during this earnings season, an earnings season that we've seen a lot of beats, but not by a significant amount. And investors still focus on the forward-looking guidance that continues to come in a bit soft.
And of course, we will break those earnings as we get them. As we wait, let's take a look at some of the sector performance that we saw today on a pretty miserable day for the S&P 500. You had 2 sectors in the green, the rest of the market in the red. You take a look at what managed to close in positive territory. It was consumer staples. It was healthcare. That screams pretty defensive to me. You take a look at the bottom. It was all your big tech names. If you look at the point contribution there, it was Microsoft, NVIDIA, Apple, and AMD leading that sector down lower.
All right, and I do want to get to some of the gainers here, but we are getting TripAdvisor earnings in. You guys seen second quarter adjusted EBITDA coming in at 90 million, the estimate being 92.3 there. Katie, do you want to go to Robinhood?
Let's go to Robinhood because we are getting some numbers there. Second quarter assets under custody actually rose $89 billion for the second quarter. The estimate there was for a hair below 83. Second quarter EPS coming in at 3 cents. And here's the redhead. The second quarter net revenue coming in at $486 million. The estimate there was for $472 million. You can see that's lifting shares. It's going to be really important when we get the monthly users because we had been expecting declines there. We're going to continue to follow this story, but right now it looks like shares rising.
Looking at amongst the biggest decliners here, looking at Generac, it's a generator manufacturer, ticker symbol GNRC, losing almost 25%, so its biggest decline since October of last year, and it reported adjusted earnings per share for the second quarter that did miss those analyst estimates. And then also AMD, we did hear from their earnings after the bell yesterday, and overall it did actually top those second quarter estimates, but unfortunately reverse course when you saw this more broader sell-off, especially in chip stocks, so falling about 7%, so its worst day since actually May 3rd. And then another one is SolarEdge, so it's a solar equipment maker. Looking at that ticker symbol SEDG, that's down 18% at the close, so its worst loss actually just since basically, if you're looking at this, actually a year ago, so it was actually August 3rd of last year when it did lose 19%. So if you're looking at brokers like Cohen, for instance, is actually one of them that ended up cutting its price target on the stock. And really what happened with that is just, if you're looking at the revenue forecast, unfortunately just did not come in as strong as what analysts were anticipating. So really a lot of that is more tied to elevated inventories on that particular group. So those are amongst some of the bigger decliners that came in at the closing bell.
All right, I think DoorDash crossing the wire right now. If we care about that, we can just hit that real quickly here, guys. We're looking at revenue coming in the quarter slightly above street estimates. Adjusted EBITDA also a beat as well here. The company, though, giving guidance here for the full year, and this is the kicker here, gross order value. They're giving a range of 64 to 65 billion, and that would be above street estimates, even at the low end of that range here. So there's been a lot of concerns here, not just about volume, but of course about margins for this business and whether that would hold up, at least based on the numbers that we're getting crossing the wire right now. That appears to be the case. So you see the knee-jerk reaction in the markets is to the downside.
Absolutely bouncing around here. It had popped higher. It had a lot of focus on this name after what we heard from Uber. Of course, Uber with its own food delivery business and really a market of two, DoorDash and Uber. And will be interesting to see what happens with DoorDash, but right now shares decidedly lower.
There's a third option too, Katie. You
What's
can just
that?
go pick up your food yourself.
No, can't do that.
Well,
Absolutely
speaking
not.
of picking up your food, I also want to move over to the housing sector because Zillow reporting revenue for the second quarter that beat the average analyst estimate. Their revenue, $506 million. The estimate there was $472.9 million. Looking at Zillow in the trade here, up by about 3.8% in the close. Mortgages segment revenue hitting $24 million. The estimate being a touch more than that. Adjusted EBITDA coming in at $111 million. The estimate only $76.9 million. So a big beat there. And this comes after Zillow reported a partnership with Redfin that's going to help buyers and builders connect. So that led to a 52-week high on that name yesterday as well. And we're seeing more green on the screen for Zillow today, Jess.
And to put in some size and scope here, where we are at so far earnings season, about 65% of the S&P 500 by market cap have reported so far earnings have contracted around 8.4%, coming in with those preseason estimates from Bloomberg Intelligence, taking the consensus estimates on Wall Street, looking for a decline of about 9% there. So still a little bit better than as far as what was expected there, but not good. So that still is the worst decline there since that we've seen in a few years here.
All right. Well, Zillow shares higher in after-hours trading. In fact, second biggest mover in after-hours trading. The biggest decliner in after-hours trading belongs to Etsy. Those earnings just crossed the wire a little while ago, and the 2Q numbers were a beat, at least on the revenue side and on adjusted EPS, but the guidance for the third quarter causing a little bit of concern. They're saying that gross merchandise sales for the third quarter will be in a range of $2.95 billion to about $3.1 billion, and revenue as a whole will come in at about $610 million to $645 million. Now, the low end of that range would be a miss here, and that might be giving people some concern. The company also saying that EBITDA margins for the third quarter are going to be in a range of 27 to 28%.
Yeah, a big miss there for Etsy, Romaine. A drop in gross merchandise sales being a huge thing to watch when it comes to the trade and the earnings information, rather, that we're going to be getting in from them. Bloomberg Intelligence saying that they're going to want to talk to Etsy about management, hopefully providing more information about a new wedding registry feature that could help offset some of those merchandise sales there. Having said that, we are going to leave you guys to continue to cover the huge amount of redheads that we're getting across the screen on this earnings coverage here. That's going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, and of course YouTube. A reminder that Business Week is now on Bloomberg Originals, which you can find on YouTube. We're going to be back same time, same place tomorrow.